Good day, trader. Stacey Burke from Stacey Burke Trading, and today talking about the vital importance of defining your trading edge. One of the things that's critical for retail traders is that you have an edge in the market, not an approach where you think that the skill set is your edge, but you actually have an edge in the market. And I talk about simplicity and duplication of your strategy, your best trading setups. And many traders have emailed and asked for the copy of the playbook and information about that. It's being put together right now, recording, printing, everything. So that will be making an announcement about that in the next few days. And I'm trying to make that as simple and detailed as possible in terms of taking objective and subjective questions out of the equation in terms of my execution. So I've put that together so that it can be easily understood and used by traders. Again, some tremendous feedback. A lot of traders taking advantage of the free downloads, the 4-step method to high performance trading, and the free audio program, the 7-step daily routine for high performance traders. The link is below in the box. They're both free downloads. Bulletproof yourself with your daily routines. Bulletproof your confidence. Develop a winning mindset. Execution, discipline, confidence to master the markets. That link is below in the box. Now, just looking at the calendar and understanding that my approach, what I see as my perceived edges is how I choose to trade the markets. And other traders may not, they may have other strategies and ideas that they want to execute and they have edge with. And that's, again, you need to do what you do best. And I talk about not trading the news. I talk about allowing the market to set up, not to try and go there and trade the moves in the market. Now, this week we have major news on the calendar. Last night we saw CPI have some great volatility on the markets. We had the Canadian bank rate statement coming up. We had that as well last night, and on the Canadian dollar, and we had official cash rate on New Zealand. We have the Aussie dollar today. Employment rate, PPI on the U.S. on Thursday again, and then Friday core retail sales and prelim University of Michigan data. So when we look at the market, if we zoom in on the Canadian dollar, and I talk about simplicity, when I'm inside like this, when I see a market that has volume trapped inside, we have our high of the week, we're inside the previous high of the week, and you see a cluster of volume, this is a dead giveaway when you're inside. And there's major news on the calendar, especially when you have double news for the Canadian dollar. There is no perceived edge for me. I don't worry about looking for something after the news in the New York Open or anything else. This to me is a low probability day. And as I talked about, this may be setting up for something later in the week. It could be setting up for something coming up in the coming week. But right now, there is no best trade setup. Now, not to say that traders who wanted to be later in the Northern Hemisphere or trading off of these highs and lows, if that's their expertise, that's their expertise. Japanese yen, we talked about the first red day. Now, this is an interesting setup. And as I said yesterday, that setups, signals versus setups. Now, all a signal ever is alerting me to the possibility of an opportunity that could be setting up. That's all that is. So we had a first red day on Monday and major news on the calendar. Now, they've gone back to the highs of the week on that major news. But what's interesting is we have inside bar traders now trapped at the highs of the break of that inside bar. They've hit the stops, triggered breakouts. We have longs up top, and their stops are underneath of that inside bar. So, again, a signal day that doesn't play out does not mean that we stop watching something, because this is a potentially building up for a better opportunity as the week evolves, or potentially even into the beginning of next week. Now, this market may break down and continue long in trend. I have no idea. Again, not about predicting. So traders, I emphasize this. the desire for the retail traders to go to the market every day and get pips and chase moves. I'm looking for days that it's easy to make money on. And when they're not there, I don't sit there and try to guess and trade the move. I'm looking for the days where the best trade setups are there, because those are the days, those are the setups where it's easy to make money on. So this may be still evolving to set up into a best trade setup. Traders don't see anything happen. They walk away. They go chase the other shiny object or the hot chick, and they miss out on something that could potentially still be slowly evolving into a best trade setup. At some point, this volatility, this violent type of move, this is being built up over the day. They're building this up to catch people into the market, and then bang, bang, hit both sides. Now, gold has finally broken out of this tight consolidated range that's been building over the last week. So we'll see if that starts to come back to some normal type of volatility. If we do come out of that consolidation down low, we could see gold offer us some explosive opportunities, especially during some of these sessions towards the end of the day, where they build the market over 3 sessions for a great explosive trade. British pound again inside. When I'm looking at these day 1, day 2, day 3, and we're inside, this is a danger zone. This is where they chop traders up. So they give us a couple of really great trading days, and traders are still trading inside like this, and these are the days that chop traders up and blow their accounts up. So again, day 1, day 2, day 3 on the euro, and if we're inside, traders trading this need to start to recognize that this is where they can get caught into a choppy, violent market. The Swiss franc, again, earlier in the day, gave a nice short trade in Europe for traders, and we're up high. We had a first red day, and that actually played out quite well for that Europe session. Not a massive move, but a clean setup in the Europe session. But again, you can see if traders are not taking profits. So prior to the news, lock in the money, get off the screen, because they come right back and wipe out traders who are, again, focused on getting as many pips as they can, as opposed to capturing a simple executable trade setup. Lock in the money, get off the screen, come back, rinse and repeat. You can scale that up in size. But if you're holding on for pips, pips, I want to get as many pips as I can, bang, they come back and get you, and you get frustrated and angry because they've stopped you at break even or even with a small loss. I come to the screen, I'm looking to execute a simple setup. I want to be able to scale that up in size over time. Keep scaling, keep scaling, keep scaling. There's scalable scalps, there's scalable large trade setups. The scalable large trade setups tend to build up over 2 or 3 days. They don't come to the screen and it builds up for an hour and then bang, there's a huge move. You might get lucky on the right day after a 3 or 4 day setup. But again, focus on scalability. Pound yen. When you're focused on pips, you'll try and trade all the movements in the market. It's at the high of the day. It's at the low of the day. It's at the high of the day. It's at the low of the day. As opposed to coming to the screen with a strategy of, somebody asked the other day about short trade. So coming back to some simple concepts. The pump and dump. 3 levels of rise. It breaks down. And when it's breaking down, coming the other side, this is a trend trade. This is a trend trade down. We get back to the low of the week. They pull it back inside, and we're chopping back and forth now. Now, what this market's going to do, I have no idea. This could roll over again and retest the low of the week. But on the way up, again, traders on Monday morning, we're at the high, day 3 to the high. We get our break in structure. There's edge. There's edge in the market there. This is normal price action. When we get into a day like this isn't normal. I mean, traders are trying to chase these moves, but again, ask yourself the question, what is your edge? That's critical, because when you can do everything right, and then you keep trying to trade because you want to trade and you want to get pips, and you can get caught into whipsaw markets, wiki markets, choppy markets, Where can you put size on in here? You're at the high, so you put a boatload on, but you're in a zone of 1-to-1 max of profit to risk reward. And when you have an opportunity where the market's collapsing, whether that's into a session and knowing the volatility, like oil loves a day 3 blow off, breaking highs or lows in the Asian session. Is it always tradable? No, but when it is set up, it offers 100 plus pips and it's over in less than 30 minutes. But then the rest of the day goes into a consolidation. There's a scalp in the Europe Open. But these are things, again, where only if that's where your edge lies. Again, just focus on one market or trying to trade an instrument can lead you into taking lower quality trades. So you definitely want to be understanding when you can execute a scalp your edge may present, and then knowing and understanding the type of day that this could be. Day 1, day 2, day 3 down. This market could consolidate. We get a peak formation low, peak formation high prior to the news. You're caught in a choppy market. So focusing on crude because it moves a lot. When we have major news, sometimes oil doesn't react to the major news, but we have no understanding of what it could do. And again, when they consolidate it, that's a ripe, red flag for them to whack both sides and just hammer anybody who's in the market. So again, I always say this over and over again. Make money on the days that it's easy to make money on. Make money on the days that it's easy to make money on. And then trading can be consistent, reproducible. Going into a day like this and seeing this narrow range consolidation inside of a peak formation low, peak formation high. We have major news on the calendar. This is a red flag. It's a giveaway. They're going to whack both sides. So remember that. Focus on the days that it's easy to make money on. Trade on the days that it's easy to make money on. Trade your best setups on the days that it's easy to make money on. Trying to trade these types of violent, volatile moves when the markets are consolidated and there's no edge is a red flag giveaway that they're setting the market up to smash any retail or traders that are caught inside. Keep it simple. Have a great trading week, and may the markets go with you.